if you're in the wait and watch mode, and we do get a follow through day at some point, do you go with the slower, pokier stuff? Or is that when you're going to want to put it towards a little bit more of the growthy movers, if those are setting up too, versus if we see the market get rejected or have another leg down, have that shakeout that resolves the wedge, then look to see how these are acting, kind of thing.
Well, I think, this kind of goes back to what Mike was saying earlier. You're going to want to watch the fish, so you're going to want to see what the market is doing, see what the stocks are doing, observe them, because the market will tell you a lot of where you want to be. But as you suggested, if both are, if you're kind of seeing setups with the slow pokey and the growth stocks start showing setups too, personally, I kind of, tend to lean a little bit more towards growth. There's just a little bit more action there. But I think it's not a bad idea to sprinkle in some slower names. You don't want to have all high octane names because that can make your portfolio unwieldy in terms of being able to hold through things. Because you got to remember, a lot of times we look at stocks in isolation, but what you have to really combat is what happens to your portfolio. And if you've got a lot of high octane names and you get a bad day, there's a good chance that you're going to be getting a big hit on a lot of your high octane names, and that's going to be shaking you out. Not because they're necessarily doing, something wrong individually, but because you've got so much pressure on your portfolio
Yeah.
that you're just like, I'm just down too much today. I have to do some selling. So if you kind of balance it out, and there's a lot of different ways of balancing it out. This is what a lot of the hedging that we've been talking about does. If you have a large cash position, well, guess what? It's a little bit easier to go with some riskier growth names, because your portfolio has that cash to kind of shield your portfolio. So it's all a balancing act, but it is really tough sometimes to remember that when you're looking at these stocks, even looking at the model book stocks and seeing how they reacted over time. A lot of times we say in retrospect, oh, look how easy that would have been. The pullback to the 10-week moving average line, you would have just bought off that line. It's so easy. Again, once you know that the stock came back from it. But in the moment, sometimes that's hard because not only is that stock coming in, a lot of stocks are coming in. You're feeling the pressure on your portfolio and you just aren't in a buying mood, because everything's coming in so much. So definitely kind of keeping in the back of your mind some of those portfolio considerations is I think important.
When you get a follow through day, where do you go? And I love the open mind thing, but you do want to keep in mind that if you get a follow through day, I would lean towards, all things being equal, the low ATR stocks, but not the defensive plays. Because when you get a follow through day, you assume that growth in general is going to move up on that. So I would avoid utilities at that point, or like a Procter and Gamble type of stock. But the REITs are kind of in between, where you could still play those because they do kind of have some growth aspects as well as a low ATR, as well as some defensive. So I think it's kind of the perfect spot right now with the interest rates, environment the way it's going to be.